33 tons. That is the number that is circulating on the trading desks this morning. That is the estimated amount of physical silver that was pulled from the open market in a single trading session during the Asian hours. While the Western world was sleeping, while the algorithms in New York were trying to figure out why the price won't go down, the dragon made its move. We are witnessing a shift in the global financial order that is so fast and so aggressive that the mainstream news doesn't even know how to cover it. They are telling you about inflation. They are telling you about interest rates. But they are ignoring the single most important story in the world right now. China is draining the global silver supply. This isn't just buying. Buying implies a trade. Buying implies that the metal might come back to the market one day. This is hoarding. When China takes delivery of 33 tons of silver in a single day, that metal doesn't go into a trading vault. It goes into a factory. It goes into a strategic reserve. It goes into a solar panel that will sit on a roof for 20 years. That metal is gone. It is deleted from the ledger. It is never coming back to the COMEX to help JP Morgan cover their short positions. You need to understand the mechanics of what is happening right now. It is a vacuum effect. For decades, the West set the price of silver. London and New York traded paper contracts, and the rest of the world followed. But today, the physical demand in the East has become so massive that it is breaking the paper price in the West. We are seeing reports that inventories at the Shanghai Gold Exchange have plummeted to their lowest levels in a decade. We are talking about a registered inventory that has dropped below 40 million ounces. For a country the size of China, the world's factory, that is terrifying. That is hand-to-mouth existence. So what do when the vaults run dry? They panic buy. They don't care about the spot price. They don't care if the chart says overbought. They care about keeping their factories open. They care about dominating the green energy transition. And if they have to vacuum up 33 tons in a single day to do it, they will. This is why the price action today is so critical. We are seeing a divergence that shouldn't exist. The paper market is trying to act calm. The paper market is trying to tell you that silver is volatile but stable. But the physical flow of metal tells a completely different story. It tells a story of desperation. If China continues to accumulate at this pace, even if they slow down to half this pace, the mathematical result is inevitable. The COMEX cannot sustain this drain. London cannot sustain this drain. We are mathematically on a trajectory for $100 silver. Not because of hype, not because of speculation, but because of a simple, brutal reality. There is not enough silver to feed the dragon, and the dragon is hungry. You need to understand why this 33-ton number matters. It isn't just a random statistic. It is the first domino in a chain reaction that ends with the complete failure of the Western pricing model. For the last 20 years, the global silver market has relied on a single unspoken agreement. The West prints the money, and the East provides the goods. We send fiat currency to China, and China sends us refined silver bars, solar panels, and electronics. It was a symbiotic relationship. We got cheap goods, they got our debt. But today, that agreement didn't just break, it was shredded. We are receiving multiple reports from sources within the logistics hubs of Shanghai and Shenzhen. These aren't just rumors on Twitter. These are supply chain alerts being flagged by major freight forwarders. The message is consistent, and it is chilling. Export licenses suspended. China has effectively implemented a soft ban on silver exports. They haven't announced it on CNN. They haven't held a press conference. That's not how they operate. They operate through window guidance. The People's Bank of China makes a phone call to the major refiners, the companies that process 40% of the world's silver, and they give a simple instruction. Nothing leaves the country. Why would they do this? Why would the world's factory suddenly stop selling its raw materials? Because they have done the math. The Chinese Communist Party looks at the global inventory. They look at the registered silver in the COMEX vaults, which has collapsed by 70% in 3 years. They look at the production numbers from Mexico and Peru, which are falling due to strikes and degrading ore grades. And then they look at their own internal demand. They are building 450 gigawatts of solar capacity this year alone. They are dominating the electric vehicle market with BYD and others. They are building a 5G infrastructure that dwarfs the rest of the world combined. Every single one of those technologies requires silver, not paper silver, not a futures contract, physical metal. If China continues to export silver to the West, they are effectively selling the fuel they need for their own economic engine. They are selling their future to suppress the price for the Americans. So they stopped. And by stopping, they have trapped the Western industrial giants in a suicide pact. Think about a company like Samsung. Think about Tesla. Think about Apple. These companies operate on a just-in-time delivery model. They don't keep massive warehouses full of silver. They rely on the global supply chain to deliver exactly what they need, exactly when they need it. It's efficient, it's cheap, and it works perfectly. Until the supply chain snaps, When China pulls 33 tons off the market in a single day and locks the export gates, that just-in-time model becomes a death-in-time trap. If Samsung cannot get the silver paste for their circuit boards, they don't just lose a few dollars. The factory stops. The production line halts. The stock price collapses. This is why we are seeing the panic bid. We talked earlier about the divergence between the paper price and the physical price. This is where it gets violent. While you're looking at your screen seeing silver at $63, the procurement managers at these massive corporations are not looking at the screen. They are on the phone. They are calling refiners in Switzerland. They are calling mines in Poland. They are calling anyone who might have metal. And they are asking one question. How much do I have to pay you to put the silver on a plane to my factory today? The answer is not $63. The answer is $70. It's $75. It's whatever the seller demands. This is creating a shadow price, or a real market price that exists completely outside of the COMEX. The paper market is becoming a sideshow. It's a casino where bankers bet on numbers that have no connection to reality. But the real economy, the economy of things, of manufacturing, of survival, is repricing silver significantly higher. And if the demand shock from China wasn't enough, look at what is happening to the supply side. We have discussed the demand vacuum. Now let's talk about the supply cliff. Newmont Mining, one of the biggest names in the industry. The Peñasquito mine in Mexico is a beast. It is a cornerstone of global silver supply. When Peñasquito sneezes, the silver market catches a cold. Well, Peñasquito didn't just sneeze, it had a heart attack. The declaration of force majeure is the corporate equivalent of a distress flare. It means they are legally washing their hands of their delivery obligations. They are telling the banks, the refiners, and the tech giants, we cannot deliver and you cannot sue us. The official reason? A labor blockade. A strike. But let's be real for a second. Let's look at the timing. Is it truly a coincidence that the second largest silver mine in the Western Hemisphere goes offline the exact same week that China starts hoarding? Is it a coincidence that the supply lines are being cut from both ends simultaneously? Or are we witnessing a resource war? The unions in Mexico know the value of what they are digging out of the ground. They know that silver is worth more than the wages they are being paid in depreciating pesos. They are holding the metal hostage because they know the world cannot function without it. This is a supply shock. In Economics 101, they teach you that when supply drops and demand stays the same, price goes up. But here, supply is dropping to zero, force majeure plus China ban, and demand is exploding, solar plus hoarding. By all laws of economics, the price of silver shouldn't just be up. It should be vertical. It should be doing what nickel did in 2022. It should be doing what cocoa did last year. So why is it pinned at $63? Because the price you see is not an economic metric. It is a political tool. The banks, the JP Morgans, the Citibanks, they are the custodians of the paper market. They have sold billions of ounces of silver that they do not have. They have shorted the market to keep the price stable, to keep the illusion of a strong dollar alive. If silver goes to $100 tomorrow, it exposes the dollar as a failed currency. It exposes the banks as insolvent. It exposes the entire system as a fraud. So they are fighting back. They are using every dirty trick in the book. They are spoofing the order book. They are raising margin requirements to force you out of your positions. They are using high-frequency trading algorithms to slam the price down every time it tries to break out. They are trying to paint a picture of weakness on the charts. They want you to look at that red candle and think, oh no, the rally is over. China isn't buying. It's just a bubble. They want you to sell, because if you sell, they can buy your physical silver to cover their paper shorts. They need your metal to save their own skins. But here's the fatal flaw in their plan, the one variable they cannot control. You cannot print silver. The Fed announced quietly, so quietly they hoped nobody would notice, that they are restarting asset purchases. $40 billion a month. They are printing money again. They are diluting the currency again. They can print dollars until the ink runs dry. They can print digital contracts until the servers melt. But they cannot print a single ounce of silver. Every time they smash the paper price down, they make physical silver cheaper for China. They make it cheaper for Samsung. They make it cheaper for India. They are accelerating the drain. They are subsidizing the very people who are destroying them. It is the greatest strategic blunder in financial history, and we are watching it play out in real time. Let's recap the battlefield as it stands right now in this moment. The East hoarding 33 tons a day, locking down exports, draining the Shanghai vaults. The West facing mine shutdowns, declaring force majeure, desperately suppressing the paper price. The industry, in a silent panic, bypassing the exchanges to secure metal at any cost. And the price? Stuck at a manipulated $63, creating the biggest discount window you will ever see in your life. This is the eye of the storm. the calm before the unobtainium phase. When the dust settles, when the paper market finally breaks under the weight of physical reality, there will be two types of people, those who held the metal and those who held the bag. We are not done yet. I need to show you the specific timeline. I have looked at the delivery schedules for the December contracts, and the math suggests we have less time than anyone realizes before the official default signal is triggered. So, how much time do we have left? If you're waiting for a sign, if you're waiting for the official announcement that the silver market has failed, you are going to wait until it is too late. The banks will never announce their own bankruptcy. They will lie until the very last second. But if you look at the supply chain data, the timeline is screaming at us. We know that China's new strict export licensing regime is rumored to fully take effect on January 1st, 2026. That means we have less than 2 weeks. 2 weeks before the soft ban becomes a hard wall. 2 weeks before the 33-ton daily drain becomes a permanent supply cut. 2 weeks before the Western industrial giants, who are currently running on fumes, hit the physical wall. The period between now and January 1st is the kill zone. This is the window where the banks will throw everything they have at the paper price. They will try to crash it to $60. They will try to crash it to $55. They will use every trick in the algorithm to make you scared, to make you doubt, to make you sell. Why? Because they need to clear their books before the new year. They need to cover their shorts before the China ban becomes official law. They are desperate for your silver, and they are counting on your fear to get it. So here is your marching order. Here is what you do while the rest of the world panics. You do absolutely nothing. You do not sell. You do not trade. You do not let them shake you out of your position for a few paper dollars. When you see the price drop on your screen tomorrow or the day after, I want you to remember the 33 tons. I want you to remember Samsung in Mexico. I want you to remember the empty vaults in Shanghai. The price on the screen is a lie. The metal in your hand is the truth. We are witnessing the greatest wealth transfer in history. It isn't happening in the stock market. It isn't happening in crypto. It is happening in the physical elements that power our civilization. The people who hold the paper are about to learn a very expensive lesson about counterparty risk. The people who hold the metal are about to set the price. The era of a cheap silver, the era of subsidized electronics and suppressed inflation died today. It was killed by a voracious dragon in the east and a broken mine in the west. We are entering the era of price discovery, and in a world that is running out of everything. The price of the most essential metal on earth has only one place to go: higher. Stay strong. Like and follow to get daily updates. Comment below your next move. And do not blink. I'll see you on the other side of $100.